Good afternoon, dear students. Myself Paratama, Assistant Professor, Department of Commerce, GFGC, Gauribidanur. Welcome for the session 36. In this session, we are going to discuss about the uses and limitation of cash flow statement. In the previous class, you learned that meaning of cash, meaning and definition of cash, meaning of cash flow statement, distinction between cash flow statement and fund flow statement. After the completion of this chapter, you are familiarized with the cash flow statement as a tool for financial analysis. After this session, you are able to explain the uses and limitation of cash flow statement. Purpose of cash flow statement. The main reason for preparation of the cash flow statement is as follows. Cash flow statement provides relevant information about the cash receipt and cash payment of an enterprise during a period of time. Cash flow statement is also provide answers to the following questions. Where did the cash come from? That is, sources of cash to the business concern. What was the cash used for? Uses of cash for different purposes. What was the change in the cash balance? This statement is also provide the information regarding opening balance of cash and closing balance of cash and the balance change during the year. Then advantages of cash flow statement. Ascertaining liquidity and profitability position. Cash flow statement helps the management to ascertain the liquidity and profitability position of a firm. Liquidity means ability of the firm to pay the obligation as soon as it becomes due. Since cash flow statement presents the cash position of a firm at the time of making payment, it directly helps to ascertain the liquidity position, and the same is also applicable in case of profitability. One can understand from cash flow statement how efficiently the firm is paying its obligation in various forms of expenses and liability. At the same time, as the cash earning capacity of a firm can be ascertained from this statement. Profitability position depends also on the cash earning capacity. Ascertaining optimum cash balance. Cash flow statement also help to ascertain the optimum cash balance of a firm. If optimum cash balance can be determined, it is possible for a firm to ascertain the idle or excess or shortage of cash position. After ascertaining the cash position, the management can invest the surplus cash, if any, or borrow funds from outside sources accordingly to meet the cash deficit. Then cash management. Proper management of cash is possible if cash flow statement is properly prepared. The management can prepare an estimate about the various inflow of cash and outflow of cash so that it becomes very helpful for them to make plans for future. Capital budgeting decisions. Since capital budgeting relate to the decision of capital expenditure in various forms on a liquid long-term basis, cash flow timing is very important for this purpose. Superiority over accrual basis of accounting. Cash flow statement is more reliable or dependable than accrual basis of accounting, as a number of technical adjustments are made in the later case. Cash flow accounting is free from such snags. Planning and coordination. Cash flow statement is prepared on an estimated basis for the unsuccessive, which help the management to know how much funds are required for what purpose, how much cash is generated from internal sources, how much cash can be procured from alternate sources. It also helps to prepare cash budget that the management can prepare, plan, coordinate various activities with the help of this statement. Movement of cash. A cash flow statement presents the management the flow in or flow out of cash from various purposes on the basis for which future estimate can be prepared. Performance appraisal. By comparing the actual cash flow statement with the projected cash flow statement, the management can evaluate the performance of the company regarding cash. If any unfavorable variances is found, the reasons for such variation is located and rectified accordingly. No doubt, cash flow statement is an important tool in financial management which exhibits the movement of funds in various ways of a firm. It assists the management to understand the amount of capital locked up in a specific segment of a firm. Some of the limitations of cash flow statement are fails to present net income. Cash flow statement actually fail to present the net income of a firm for a period since it does not consider non-cash items which can easily be ascertained by an income statement. It can be used as supplement to the income statement. Fails to access the liquidity and solvency position. Practically, cash flow statement does not help to assess the liquidity and solvency position of a firm. Proper liquidity position cannot be assessed from the cash flow statement which presents only the cash position at the end of the period. It only helps how much amount of obligation can be met. Our cash flow statement does not present the real liquidity position. Neither a substitute of fund flow statement nor income statement. Cash flow statement is neither a substitute of fund flow statement nor a substitute of income statement. The functions which are performed by a fund flow statement or income statement cannot be done by a cash flow statement. Not to assess profitability. Practically, cash flows from operation does not help to assess profitability of a firm since it neither considers the cost nor revenues. Does not conform with Companies Act. The provision which are made by the Companies Act is not conformly with profit and loss account and balance sheets and not in conformity with cash flow statement which is prepared as per Accounting Standard 3. Does not assess future cash flows. Since cash flow statement is prepared on the basis of historical cost and such, it does not help to know the future projected cash flows. Inter-industry comparison is not possible. Since the cash flow statement document does not measure the economic efficiency of a firm, in comparison with other inter-industry comparison is not possible. Example, a firm having less capital investment will have less cash flow than the firm which have more capital investment having a higher cash flows. Methods of preparing cash flow statement. There are two methods of preparing the cash flow statement. They are direct method, indirect method. Indirect method of preparation of cash flow statement is also known as preparation of cash flow statement according to the provision of Accounting Standard 3. Both The methods give the same results in respect of final total as well as the subtotals of the three sections, that is operating, investing and the financing. They differ only in the manner the information regarding cash flows from operating is presented. Thank you very much.